private equity buying up accounting firms?
Really interesting. So the question is what's happening in the accounting, audit, forensics, tax world. Many of you may or may not remember, but during the Enron crisis, there was a whole movement to change the way accounting firms dealt with their customers. They wanted to create Chinese walls so that there wasn't conflicts of interest. This all was a response to Arthur Andersen, who was being very, very creative with Enron and other energy firms, and they were allowing very ambitious mark-to-market accounting principles. Mark-to-market basically means that you get to mark your books. Let's say I sell $1 million worth of electricity to you, and I'm going to mark a margin of, say, hey, I made $100,000 on that $1 million. Arthur Andersen would then, let's say the counterparty that I sold that to, let's say it's Enron. Enron would then go to Arthur Andersen and say, hey, Natural Gas Clearinghouse or Dynegy, Gary Cardone sold me $1 billion worth of energy. We're going to mark $100 million worth of profit. Now, remember, I marked 100 a profit. You, the counterparty, goes to Arthur Andersen and said, hey, this is a 10-year deal. We think it's worth $10 million to us. So they mark their books one way, I mark my books one way, and Arthur Andersen stamps them both and says, you both made $10 million. That all would come to a instant stop when everyone realized that these marks were simply accounting entries to boost profitability or the appearance of profitability. So what happened was the response, and I know this is a long answer, but the response by all the accounting firms was to basically franchise out, for instance, a ABC top 4 accounting firm will have probably 10,000 offices, all people working in different areas. They're all LLCs. They're not one major corporation. Notice very few, if any, accounting firms, tax firms, are actually public companies. So they're all private. They're probably, because they're not public, I would say they're probably not as efficient as they could be. They have very few shareholders. The shareholders are basically the founders and management team. Private equity, like a New Mountain, walked in and bought Citrum and Cooperman. This is a year and a half ago. Then New Mountain bought Grant Thornton. And it's my understanding that private equity is looking at probably 150 of the top accounting, tax, audit firms, because they are able to go in there with their cash, free up those founders who have been in this private business just generating cash. These guys will get those guys out, restructure the entire business, probably take them public, combine some activities. I'm very, very, very excited because I actually own a company called Node 40, or own half the company called Node 40, that serves this industry. And we are so excited. I just had an investor yesterday, the CEO of the company pitched an investor. We're raising about $8 million. And we said, well, look, we don't really need 8. We need $4 or $5 million. And they questioned the CEO. They said, hey, look, why are you raising right now? And his answer was, hey, our majority owner forced us, that's me, forced us not to have a sales team. And this guy's been marketing and doing sales his whole life. My view was, you guys just focus, your 26 people, your 26 coders, focus on building the best solution in the world. While everybody else is out selling shit that they don't even understand what the needs of the customer are. The customer himself does not fully understand what they need. So while everybody was busy spending $5 million with salespeople to sell nothing, we decided not to spend any of that money, which, by the way, there was a very good decision. Node 40's raised less than $7.5 million, okay? For less than $15 million, we will build a $500 million business. I would rather invest $15 million and build a $500 million business, and I kept most of the equity, than building a $3 billion business and I get diluted like a little bit, right? So back to the private equity. Private equity, let's think about what private equity does. They put money to work. They know how to raise money from LPs, limited partners, and they know how to then put that money to work. They do not know how to operate a business. They don't want to operate a business. They want to operate money, and they want to manage their investments from like 30,000 feet with some basic metrics. I think the private equity firms actually may see that the accounting business is one of the great cash businesses to go after. And I would predict in the next, say, 18 months, some of the largest accounting firms in the world go private into the private equity world and get packaged up and go public. Offers Node 40 an unbelievable opportunity because some of these firms I walk into, literally top 4 firms, hey, I can generate another $700 million in revenue. I'll guarantee that. There's 2 top 4 firms that I would guarantee that I could generate $700 million in revenue in 2025 if they just get out of their way. If they had commercial teams running these operations and could bring all these thousands of people together and go, you're going to use this software that's labeled as XYZ audit firm. It's going to be under that name, and you're going to push that out to every player that owns a digital asset. You will have private equity will get this so quick. You'll have a digital expertise division, just like Deloitte's putting together. They got 2,000 experts now. Everyone's going to have a digital division, and that digital division is going to need tools specifically built to serve the digital future. That's really, really important. If we think about we are moving into a digital future and all the infrastructure needs to be bought, that's why I got involved with Node 40, because I can see out into the future and go, hey, 2-3 years from now, the IRS is going to want their money. The DOJ is going to be investigating people. There's going to be divorces. 46% of everybody that holds Bitcoin is going to be divorced. I'm sorry. That's just the numbers, okay? 100% of Bitcoin holders are going to die, and nobody's prepared to do reporting to protect the money they're making from misunderstood, ill-equipped technologists or lack of technology, people that don't understand Bitcoin or cryptocurrency or digital assets or blockchain. Why do you want them messing around trying to figure out what the numbers are? Already a very complex field. The amount of new stress that will hit reporting, accounting, audits is staggering. We think it's going to triple or quadruple in 2025. That is 5 months from now. Quadruple the amount of reporting and forms that are currently being done just to serve the legacy world. So this is an opportunity. If you've been here before, like I have, this is an opportunity for picks and shovels business to generate. I mean, by the way, after I generate $700 million for that one player, I made $70 million. Node 40 will make $70 million. The accounting firm will make 700. And if they do it correctly, it will mostly be EBITDA because there's no expense. Node 40 will do all the work. The private equity players will get this so rapidly. Quite frankly, I think that the sooner they start cobbling these businesses together, you're going to see massive, massive change in the way these accounting firms look. And it's really, really exciting because this is something that, one, is mandated by the United States Treasury Department. There is no option. And I think there's probably less than 0.5% of true money that's moved into Bitcoin, 0.5%. That will go up. And at 0.5%, the industry's already going to overwhelm Treasury, tax, IRS, and all the accounting, audit, and forensic firms that serve them just on the penetration we have right now, which I maintain is really low, going to probably 3 to 5% in the next 2 years. And it's just going to be so much volume without unique, bespoke tools built for purpose for digital, not blended, band-aided, glued, metastasized, mutated, or morphed, built for purpose from scratch with 21st century technology, 21st century coding, putting AI into this solution once you get the data. It's one of the greatest private equity opportunities I've seen in years. I like this trade better than buying accounting firms because I don't have a bunch of resistance and friction to manage. Literally driving new services and technology to drive new revenue streams, which is pretty exciting.
Why didn't the accounting companies go public sooner? Why have they stayed private for so long?
They don't want the exposure and all the litigation issues. See, so the Enron debacle happened in 2001. It's 2023, 2024. 23 years later, they're still remembering Enron. Like it was a massive problem for the accounting firms. They thought they were going to go to jail, man. And nobody wants to go to jail. Nobody wants to get DOJ letters and fraudulent claims, right? That's just not good for business. So they just all went private and LLC'd up. And they're not using their money probably the most effectively. They kind of hide behind some of the Chinese wall issues. Like look, and the very interesting thing is if you look at the accounting firms, they are representative of every other analog business. It's just hitting them right in the face because we have a treasury document that was released on July the 19th. September the 9th, I think it is, we go live. September the 9th, the Treasury Department gets full approval to move forward with their freaking reporting requirements. That's in 2 months. That's in 1 month, okay? That happens. Once that's rubber stamped, January 1st, 2025, you are all responsible to report. It's gonna, like, no one understands what's getting ready to happen. This is literally like there's 52 million people in the United States driving new vehicles, and they all have to file for a new license. And they have to show all the mileage, all the speed limits they did, what they did and didn't do, when they bought gasoline, how much they put gasoline in. I mean, I'm using an analogy, right? But imagine 52 million people show up tomorrow morning and go, hey, I have to report all my driving. I have to report my license. Nobody has any of this stuff. I did 16,000 miles last year, and 8,000 miles was for Bitcoin, and 4,000 miles was for Ether, and 2,000 miles, and I paid this much to do all that. And by the way, now I'm up $8 million. And yes, I do not own taxes because I have not sold it, even though I moved coins all between wallets over 3 or 4 years. This is really, really a different way to do business. And I think the private equity, once they see the revenue streams, and no one's really sat down with them and gone, hey, you're going to be able to charge $12,000 to $25,000 for every digital asset holder as a retainer. This is the reason for, I probably need to go I know I need to meet New Mountain. I've been trying to reach out to them and I just get too busy. But there'll be dozens of these companies that own accounting and tax firms. And I would probably invest in some of them, quite frankly, Sam. I think that I would probably invest in a PE firm that was going after to cobble these guys together. I could see how you could, if they're not efficient. I mean, there's too many people. I mean, I'm at one top 4 firm. The head of transformation, awesome human being. Met him in Tampa, had dinner with him. They have 800,000 people. Can you imagine trying to move 800,000 people into the digital world? I mean, we are moving literally from incandescent, or actually probably from a flame on a stick, like in the old Harrison Ford movies, to LEDs, right? And LEDs with like 3,000 miles worth of light. It's just such a different game, and you're going to need new tools. So private equity will bring new thought process to these firms. They'll be more aggressive. They'll probably go global, which is really interesting. If you're accounting, why is it all just stuck in the United States? I mean, we are going to have global trade, even though we don't have a globalized market and it's fractured. I actually think that creates more trading, having fractured markets. I predict that we're going to have 4 to 5 markets that are all trading different currencies. That's awesome for Bitcoin because it puts Bitcoin in the I am Switzerland, right? Think about, like, if we have 5, 6 markets, BRICS, whatever markets there are, and everybody's decided, okay, US dollar, crude oil, natural gas, whatever you want to put, maybe some Bitcoin for the US markets, and then BRICS does gold, crude oil, whatever they do, right? I think gold will act as a neutral. And I think people are going to figure out, hey, Bitcoin's actually a neutral commodity. That would fit really well in this basket. That's minimally that it's going to play a role in the basket. But what if it's actually, hey, actually, we're going to use it as the core, as the base value. Either way, Bitcoin wins. And either way, anyone building technology for the 21st century is most certainly going to win, because these private equity firms will deploy all these tools into these firms. The private equity probably is very also aware that most of these firms cannot build anything. They're not software companies. They're accounting service providers. And they will come into these operations and go, you're not building shit. I mean, they will cut all of that crap out. It would be better for New Mountain to buy Node 40, and then just slam it into all their businesses, and they get an upside on Node 40, and they get an upside on their private equity investments. Guy that leads is going to win, man. I mean, the guy that gets out of his own way and gets a new culture, this will be the issue for every major player. It's not money, it's culture. It's an ability to get that ship that's so big, 800,000 people. How do you get a ship that's 800,000 people around the world to shift, pivot very rapidly? TikTok, okay, January 1st, 2025 is coming. No one understands how fast all this is happening, and it's going to create an accordion effect where there is so much demand all at one time for certain of these services. I most certainly believe this is one of them: the Node 40, the tax, the accounting, the audits, the litigation. There is an opportunity to build a complete standard by which all crypto is reported, audited. This is my what I do. I go into these businesses that have big gaps, and literally I want to create the standard. My point about the firm that we were talking to yesterday, sorry, I bounced around there a little bit, but the CEO looked at the guy and said, hey, look, our majority owners build while these other guys are just selling shit. They're going to irritate people. They're going to fail. They're going to non-perform. And they're going to have 35 salespeople they're paying $150,000 to, and they're not going to sell. They're going to spend $5 million making $1 million. And they're probably not even going to have the $1 million, probably won't even be recurring retention, because you're going after the wrong client. So when he told this to the investors group in New York and Miami, they were like, we like Gary already. They had not even met me, but they thought, I am so excited about some of this new money coming to these markets, because they're very much more mature than what I've seen in the prior 5 or 6 years. 5 or 6 years, they come in, here's $400 million, go. That's ridiculous, man. I mean, I literally had a guy the other day say, hey, I need to put $50 million in Node 40. Otherwise, I'm not interested. And I'm like, well, I can't maturely and responsibly spend $50 million. Like it would take me a long time to put $50 million to work. I could go cobble up and buy a bunch of companies, but why? For $5 million, I can build a $500 million business, and then I can go buy these other guys, because they're going to fail. They're going to grab too much cash. Their IT teams aren't going to be able to navigate this world. From what I've seen in the digital asset world, very, very few firms are set up to go the long haul. I mean, great. You might be able to make it for a year or two, but the management teams in some of these companies are so heavily weighted on coding and IT that their commercial acumen and understanding how to sell things in the market and deliver them and scale, very few people are prepared for that organizationally. Like, you might have it in your head, but organizationally, people have to follow it through. So it's really, really exciting to see some of this smart, really smart patient money. I mean, they're not really patient, but they're patiently smart. They're not stupid trying to rush just to go grab a dollar. It's going to be exciting, man. I think if you're in the accounting world, there's lots going on. If you're in the audit world, lots going on. The level of expertise that is getting ready to grow from this space is really, really impressive. If I'm in that arena, I'm begging to go into the digital division. If you have a digital division in your company, you should be asking for a job. If you don't have a digital division in your company, you ought to go ask to run the bloody thing, because it's going to be really, really exciting. This is where careers are made and flourish, when somebody sees what's happening here and then moves on it and takes the risk of going into it, takes the risk of being wrong, possibly. Your downside, if you're wrong on this, is next to nothing. So if I'm wrong, private equity will be here in 2 years, not a year. But I think they're going to be here next month. They're all over the place right now. Which, by the way, if you're trying to do business with some of these companies, you need to know that. Okay? Like, I knew that a year ago. I'm like, okay, some of these deals are going to take a long time to do, because I'm actually probably talking to the wrong guy. If a company is in play with private equity, they're not going to do a deal. They're going to figure out, hey, what's happening? Because they know, let's say it's EY or KPMG, and I'm just using them as examples. You understand that everybody else has been called to. So if private equity is walking into ABC, they've been to 1, 2, 3, XYZ, LMN. They've been to them all, dude. They're looking at everybody. They got spreadsheets on every company, who's who, what their revenue is, what their EBITDA is. I mean, it's like a military operation. And this industry is designed that once one or two of them go, they'll all go, because it'll become a very competitive environment. It's a game. M&A actually is also game theory. M&A, mergers and acquisition. And it's when you're in the middle of it and there's a big M&A play, it's really, really exciting. So tons of opportunities. So that's, I think, why private equity is buying accounting firms. They have tons of cash on the sidelines. They love cash generating businesses, and they can deploy massive amounts of money. I mean, these deals will be, I'm sitting here going, hey, I only need $12 million or $5 million. These guys can deploy $500 million tomorrow morning. So, and that's what private equity loves, deploying chunks of cash into large companies that have ability to get more efficient and expand on the revenue stream. That's a double hit, right? If private equity can come in and make the business more efficient and then expand revenue, that's a double win for the shareholder. So, and the private equity firm would be the core shareholder at that point.